Hey, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 29th, yes, 29th of March, 2023. So, yeah, welcome everyone. Welcome to this Wednesday's actually, yeah, Wednesday. Today's Wednesday, yeah, Wednesday's morning session, where we're gonna have a look at the markets through the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and should not be considered as such, of course. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest, and we can continue. I'll just disappear here for a little bit, and I'll leave you to read the rest. Okay, guys, so I'm back. Okay, also before we jump into the charts, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. Check out our different trading conditions. I mean, we do have a good offering here. Look, if you have any questions in general, just you can drop us an email, drop me an email, uh, get in touch with our customer support, and yeah, we will be happy to help you out about it. Now, guys, jumping into the charts. So the first one I want to pick up here is yeah, Nikkei 225. So far, everything's working out nicely here. We are pushing to the upside, and yes, we broke my target. Look, I talked about this 50-day EMA. I said that if in order to get comfortable with higher levels, I need to see a push above all of the EMAs here. Also, what I needed as well. It said that for extra confirmation, a push above the 27,440 territory might do the trick for a few more buyers because a forthcoming higher high would be confirmed. And so far, it's working out nicely. So yes, we are moving to the upside. Ideally, I'm targeting this next target at 27,863, approximately around there. It previously acted as a good area of resistance. Actually, the highest point of February, if I'm not mistaken. Yep, that's correct. Also, it acted as a low here on the 3rd of March, the inside swing low of the 3rd of March, so good potential target. Let's see if we can reach that one. So far, everything's according to the plan, but like I said, let's see if we can reach the target. Another thing that I really don't want to overcomplicate here things, but I'm kind of keeping it in mind and just in case, you know how it is. Like, you're starting to question everything and blah blah blah. But look, we have this upside line, and we have well, we could draw this here as well. So basically, what I could say is that maybe we're seeing a nice rising wedge pattern according to all the TA rules. These patterns tend to break to the upside. So, oh, sorry, to the upside, to the downside, but still a confirmation. Oh, let me just button this shirt here. There we go. But still, yeah, a break through the lower side is needed. So basically, look, either way, guys, I mean, at the moment, I don't want to overcomplicate things with this. I don't think that it's a very kind of easy and straightforward pattern here. So that's why I'm just gonna get rid of it. For now, I'm gonna just approach it from a very simplistic way. So as long as we stay above the 27,440 territory, I'm gonna aim a little bit higher, not too much, only up until here, the 27,863, and then we will kind of take it from there. ASX 200, guys. So, oh, and by the way, with Nikkei in general, the indices are showing positivity. In a way, if you're a bear, if you're a bear, then be cautious, be careful. Yeah, at the moment, even let's say if we look at the MACD, you can see that it started. Yeah, it started. It went into positive territory. and above zero, and we see the yes, the SMAs here kind of also pushing, well, crossing nicely here. The shorter one, the faster moving one crossed the slower moving one. So yeah, look, in a way, I would say yes, I'm leaning towards the upside, but again, only up until here initially, and then I'll take it from there, guys. ASX 200, so the Australian index. Yeah, we broke this weird formation of mine. We broke it to the upside, and look, I said to you that even if we break through it, be careful around here near this 7,100 zone, because it could provide a bit of resistance. We're still overall, we're still below all of the EMAs here on my daily chart. So in a way, yes, we had a nice great move here to the upside. We broke it, broke this upper side of the triangle pattern. We can get rid of it, by the way, now, because look, previously in general I talked about this and I said that whenever we have a formation like that, the prevailing trend was to the downside, so in a way we could still see a break to the downside. But look, maybe it wasn't even a triangle, maybe it's going to be something else. So maybe it's going to be like a bearish flag or something like that. So we need to kind of constantly reevaluate the situation. Yes, we broke it, the upper side of that triangle. Okay, I'm leaning a little bit more towards the upside, but as I said, I'm going to be very careful around here near the 7,100 zone, and then we will go from there, guys. Now the okay, I decided to pick up on the Nifty 50. Look, if somebody finds it useful, great, guys. Although it's a little bit tricky, I would say it's not as straightforward sometimes, to be honest, because the rest of them, okay, with everything is not straightforward, but with this one, I think it's a little bit more. So if you trade this successfully, congratulations to you guys. I mean, this is sometimes a little bit on the difficult side, but either way, guys, look, I mean, for now, what I'm seeing here and what I've mentioned yesterday, that overall we're on a decline, and since from the beginning of December of last year, we are just drifting lower, trading below this medium-term downside resistance line taken from the high of that 2nd of December. And yeah, we're now below all of the EMAs. So again, we're probably going to keep an eye on this one, and it's going to continue trading somewhere around here. And as long as it remains somewhere in there, I'm just gonna kind of keep an eye on this one. And if we do pop up with the 17,255, yes, I will consider a larger correction to the upside here towards this downside line. Well, initially not the downside line, but the EMAs here, but then towards the downside line. So I'll keep an eye on down if in case this decides to break this short-term sensitive upside support line taken from the low of the 16th of March, then yes, that's a different story. We could see this one kind of moving straight away to the downside. So yeah, that's the situation here on Nifty 50. Okay, guys, so Nasdaq. So there we go. In general, I mean, if you've seen the name of the webinar today is like market moving data is needed, and in a way it is true. So okay, we got kind of used to, throughout the whole March, we kind of got used to big fluctuations and this market moving data coming out. So yeah, it's kind of, the appetite is there now. So it would be great to see if we can, get something this week. But look, today we do have some data. We have the pending home sales coming out from the US. Yesterday we had the house price index coming out. That came out, well, the house price index year-on-year one came out lower than the previous number. So, okay, the previous got adjusted at 6.7, but the actual came out at 5.3. So there was a bit of a decline. And let's see how the pending home sales are going to come out today, because again, the data right now, the month-on-month figure states that if the previous one was at 8.1, the forecast is minus 2.3. So yeah, that's going to be an interesting one to see, and we'll see how the market reacts to that. But look, in a way, if the number comes out even worse than, let's say, the forecast, we might see like a temporary like drop, maybe a slide in the U.S. equities, but then maybe it could pick up again because maybe this could be seen for the Fed as a stopping of the rate hike. So it's like they could slow down on the whole kind of being aggressive towards the rate hike. So yeah, that could be seen as a positive for the market, and we could see a push nicely to the upside. Now again, this is just a speculation. Let's see what the number comes out. Actually, it's difficult. We don't have the crystal ball, unfortunately, so we'll have to just go from what we'll get. Now, yesterday I think we also had some the CB consumer confidence number, which came out better than the forecast. So yeah, okay, that's going to be interesting. But still, either way, guys, the main interest will come tomorrow. We have the US GDP figures, initial jobless claims. So yeah, and on Friday, of course, we do have a bunch of data, the UK, the Canadian GDP numbers, and of course the US PCE figures, which are carefully monitored by the Fed. So keep that in mind. Now then, from the technical perspective on Nasdaq. Well, what I would say here is that look, in order to consider a move higher, a push above that 12,950 territory would be required. Still, yeah, the same. I'm still looking for the same thing here, so I'm not really kind of trying to improvise here too much, but yeah, I'm keeping an eye on that 12,950 territory in order to go to the upside. For the downside, look, yesterday we broke my level, the 12,733, but we failed to stay below it. So that just kind of proves to me that it's quite an important level to watch. So in order to go lower, I need to see a nice good drop below this area in order to consider, yes, a move towards that 12,500 territory, or even below that. So same analysis is valid, guys, still. So we just need some market moving data to come out. The German index, similar story. Look, we're also waiting for this one, but at least the downside line is getting broken or getting violated. So the question here is, can we stay above this downside line? Can we break it normally, clearly, and can we stay above it? So I would say at the moment I'm kind of cautiously leaning towards the upside. I do understand that as long as we remain below this downside line, and if we continue to get these false breakouts, yes, it could still be under pressure, under selling pressure. But the fact that we are above all of the EMAs still, that's kind of giving me some positivity here. And I want to see if we can actually, climb further north here. Look, at this point, like I said, I'm gonna remain cautiously bullish, and I'm gonna target my 15,700 territory, and then we'll go from there. For the downside, the same analysis is valid still. 15,160 zone is needed in order to consider a move to the downside. US dollar index. So, okay, this one is trying to, well, this is the interesting bit. It's trying to form that higher low, and so far it seems it's successful. So that means that maybe we could be preparing for a bit of a push here to the upside. Well, let's not rush into anything, of course. Like I said, as long as the upper side of the falling channel remains intact, this could still drift lower. So keep that in mind, guys. If we break it and stay above it, great. We'll go to the upside, and then I'll aim for that 103.05 territory, or even this 50, 100, and the 208 EMAs, and then we'll take it from there. For the downside, as I said, yes, as long as we stay below the upper side of the falling channel, yes, we could still drift lower. Now then, gold. Okay, this one is a roller coaster ride. Honestly, yesterday, look at this. So what I was talking about previously, basically, I said that if we somehow climb back above this 1960 territory and stay above it, I will get a little bit more excited with the with the upside. So, well, so far, yes, we got that. I mean, yesterday we pushed higher towards that 1975 territory. Then we're now seeing a drift back down. We're going to be testing that 23.6% retracement on the Fibonacci here right now, or should I say, we are already testing it. The question here is, can we drift lower again? Can we move back down? And can we push back towards that 38.2 territory, 38.2%, 38.2% retracement on the Fibonacci, which is roughly around that, 1935 territory, something like that. It's a good question, of course. Currently just monitoring the situation. But like I said, yeah, if we somehow rebound back up from that 1960 zone, well, I could go back to the upside here, or we could see a move back up. So keep that in mind. Ian, yes, hello, good morning to you too. Good morning to everybody else as well who's joining in. I'm happy to see you here and happy to see everybody else here as well. So I hope you're all having a wonderful start of Wednesday, guys. So now then, that's in terms of, like I said, gold. In terms of oil, look, so far so good. According to the plan, I think we're just a little bit a bit shy from kind of actually testing the upside line or that 50-day EMA. And look, I said it before that whenever you're targeting an area or a level, target the area around that level. And I would say if you manage to pick this one up from here, from the 70 mark, and now you're here somewhere like this, and you're thinking, hey, I'm just gonna wait until it actually hits the 50 or the 50 EMA or the upside line from underneath. Well, actually, I would suggest to take your profits, because again, okay, if you want to take part of your profits, that's also good, and you want to continue waiting for this one. Maybe it's going to go higher, maybe it's actually going to clear the 50 and then going to go towards the 100-day EMA or even above that. Yes, could be the case, of course, yes. But look, just enjoy your profits. I always say to people, enjoy your profits, guys. Like, you rather take a little bit than go for something, like go for a killer or something, go for a massive amount. Just kind of enjoy your profits. Like I said, just even if you manage to make yourself some profit on and cover a cup of coffee somewhere in a coffee shop, great, wonderful. You're doing good. Anyway, guys, so like I said, yeah, at the moment, everything so far so good. I'm keeping an eye on this upside line. I want to see if this is going to get reached. In general, I would say mission accomplished on this one, but now, in order to go further north, I need to see a push of that 50-day EMA, and at the same time, we would climb back above this upside line. Now, another commodity that I like to look at, excuse me. Yeah, I need to drink a little bit. Okay, guys, sorry about that. So another commodity that I like to look at sometimes is wheat. Wheat, yes, it's commodity that, yeah, it spiked when the war started last year and started gradually declining because, again, initially everybody kind of feared that there will be a shortage in supply because kind of because this grain, this commodity mainly comes from from Ukraine, from Russia. So, and yeah, it seems like there's still enough of it. So no need for the prices to be somewhere around here. And yeah, you can see that everything declined back down. And if your bread in the shops is still high, then well, it's due to other factors, not actually the wheat. So if somebody will tell you that it's because of wheat, they're wrong. It's just basically because of the services in general got more expensive, and they're not kind of getting adjusted back to the downside. So yeah, and this is like, this is the problem. But anyway, look, in general, why I'm picking up on this one, because in general, maybe it's forming a nice double bottom. That's what I wanted to say, that if that's the case, we have a neckline, which we're very close to. And if we clear this one, we could go higher. But look, of course, as you can see in my chart right now, I do have a bunch of other obstacles on the way higher here. Like, for example, this downside line. But this downside line is a bit on the tentative side. So Be careful on that one. So it might not work. Actually, maybe it's just what I'm going to stick to actually are the EMAs. So if we do clear this so-called neckline, and if it is a neckline, let's see if we clear it. My next target is the 720 zone, the 50-day EMA. If that gets cleared, then I'm going to go slowly towards the 100 and the 200. So, just go slowly. Don't rush into anything. But at this point, like I said, it's quite interesting because it might play out nicely here for the bulls. So let's see, of course, like I said, how this is going to play out. But again, the bulls should not get way too excited because, again, a bunch of obstacles on the way higher. There are, yes, a lot of those. So just kind of keep a cool head on your shoulders. Now, jumping into Litecoin. So I talked about this one recently, and I said that, look, we broke the downside line. We're still above this upside line here. So the downside line drawn from the high of the 16th of February got broken. We're still above the upside line taken from the low of the 11th of March. So everything's kind of working out nicely technically here. So yes, I mean, I am kind of cautiously bullish. The reason why I'm cautiously bullish and not very bullish because, well, I would, to get a little bit more excited with the upside, I push somewhere above this territory, maybe the 94, 95 zone, approximately around here. Push above it, yep, may attract a few more buyers into the game then. But at this point, yes, one part of the bullish scenario is working out. Excuse me. Let's see if the other part of the bullish scenario works out as well. So I need to see a push above that 95 territory in order to go a little bit more to the upside for the downside now. First of all, I think it's time to get rid of this downside line. No longer needed. And I think I'm going to just mark some of the key support levels here. For example, this 85.85 zone. If we do get a nice drop below it, that's where I'm going to get a little bit more excited with the downside. And then I'm going to start aiming for these levels and then so on and so on. AUDJPY, guys. So this is what I was talking about previously. Look. We broke the downside line, and in general, AUDJPY is seen as risk on, risk off indicator, and basically that's the reason why I'm also a little bit more on the bullish side. You have here a commodity-linked currency against the risk kind of safe haven currency. There we go. Here basically the situation is that whenever, let's say, we have AUDJPY rising, it's not always the case, but most of the time it shows that the risk-on environment is improving and more people are willing to risk and go into stocks and stuff like that, and that's why the stock market might rally. So at this point, look, honestly, I need to clear up my voice here a little bit. Just bear with me one moment. Sorry for disappearing there a little bit, guys. I mean, like I said, early morning for me. And my voice, I think I didn't do too much of la 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 la. Anyway, look, AUDJPY sometimes is seen as a good, like I said, risk on, risk off indicator. And at the moment, we're seeing that it's kind of pushing back up. It's trying to make its way higher. It cleared one of the obstacles here, the downside line, taken from the high of the 15th of March. Okay, great. My next target is as I said before, my next target is the 89 zone. And what I've mentioned before is that, like, if you break this short-term downside line, I will go towards that 89 zone. At the moment, I am sticking to my guns, and I'm going to aim for that target, and we'll see if we can actually get that move. For the downside, if suddenly it starts drifting back down and falls below the 87 zone, well, this is where I will get a little bit more excited with the downside, and I will target that 85.90 territory or even below that. NZDCHF, just a quick update on this one. I talked about this previously. Look, still watching that downside line taken from the high of the 24th of January, but look, I said before to you as well that in order to go lower, I need to see a drop somewhere below the 0.5664. because at the moment it seems that we're trying to, it's forming a higher low here, and in a way maybe this could be ready for a breakout to the upside. However, until we get that breakout, we cannot really get comfortable with the upside scenario. So we need that push. We need that push higher here through this downside line, through the 50-day EMA, and then we can go from there. Look, like I said, I'm playing the waiting game, unfortunately, but it could present itself with a nice opportunity later on. But if it falls below the 0.5664, that's where I'm going to get a little bit more excited with the downside. USDJPY. So, looking at the picture here, we are, yes, pushing back up here, and it seems like the dollar is trying to make its way higher. Look, if this pushes, if it does push nicely to the upside, if it does make its way higher here, breaks the downside line here, and or the upper side of the falling channel, then yes, we could see also USDJPY pushing nicely to the upside. And in general, if the stock market goes higher, yes, there is less interest in the Japanese yen. So that's why I would say be careful here at the moment. Yes, I'm cautiously leaning to the upside. My next target is the 133 zone, around that 50-day EMA. If it gets cleared, then yes, I'll go further north. But at this point, I'm only aiming for that target. USD-CAD now. Very quickly on this one, guys, we dropped. And here, basically, it's not the... Okay, you might say, hey, why the dollar's declining here against the Canadian dollar, although it's showing kind of a little bit of resilience. Look, here the main driver is oil. You have oil strengthening and you have Canadian dollar strengthening, simple as that. And now you're getting that nice move here. We're getting that nice move here to the upside, but look, we're still below 1.3630 zone right here. If we continue to trade below it, I'm still leaning towards that 100-day EMA near the 1.3537 zone, or I would go further south here towards the 200-day EMA, and so on and so on. So at this point, look, I am, like I said, I like the situation here to the downside. The only thing, my only little issue with the downside is maybe, just maybe, we're having here a nice little maybe downside channel here. Again, not a very ideal one, but maybe something like this could be possible. I'm gonna remove this for now, not to just gonna overcomplicate things, but like I said, if it presents itself with if it continues to trade below that 1.3630 zone, it could present itself with a nice opportunity to the downside. So let's keep an eye on that one. GBPJPY very quickly on that one, guys, as well. Look, we are closer to the upper side now, and we're closer to the upper side of the triangle pattern, or again, it's not an ideal triangle. This is my problem with it, because we have kind of a lot of space here. So we're near this downside line, let's call it this way. And if we clear it, great. We could go further north, because at the same time we're already above the all of the EMAs here, and that's why more buyers could pick up on this one and push higher. Again, what I wouldn't like to see is a false breakout, and if something like that occurs, guys, then there's a problem, because again, maybe we could drift back down, and maybe GBPJPY could end up sliding back to the downside. However, as I said, for now I'm cautiously bullish. I need to see a clear break of this downside line. If we stay above it, great, I'll go further north. GBPNZD. So yeah, the one that I picked up yesterday, it's quite interesting, because look, I mean, what I said to you yesterday is that, hey, maybe, just maybe, we're forming a nice little rising wedge here pattern. Of course, these patterns tend to break to the downside, but if as long as we stay inside the pattern, the trend could still remain, the short-term trend could still remain to the upside. So that's why I have my curved arrow like this. So we could drift a little bit lower, test the lower side of this, and then rebound and push back up. Now, I'm not really getting way too excited with let's say much higher levels, because we do have a downside line again. Okay, it's a medium term, or actually more of a longer term now. Long term tentative downside resistance line taken from the high of the 3rd of February. We could end up maybe testing it, and as I said to you yesterday, look, what could happen here as well is that we could, trade inside the rising veg in general. Everybody will see that, yeah. Look, I mean, it could, like I said, it could continue trading here. It could be seen as a bearish indication, like the whole rising veg pattern. And then let's say if it pops higher, breaks the upper side, and then kind of tests the downside line and drifts back down, then yes, we could see, a nice beautiful false breakout, and then of course we could start considering a move lower. Ian, interested in Netflix stuff, kindly check that out. Look, with Netflix, okay, this is this is a stock, so it's a little bit on the tricky side. I mean, I of course you can apply technical analysis on it, but probably need to dig in a little bit more into the fundamentals. And look, it's at the moment I would say, okay, technically, look, if I may just have a look at this. Okay, look, in general, okay, I'm not even gonna go there too far, because again, it's a little bit of a different story there. Apart from the technicals, you need to look into the fundamentals as well. So that's why I would say at this point, I mean, there is some upside potential for it. However, again, I think the earnings are coming out soon, in April, I think, or something like that. But look, let's not go there in general. I mean, I think you can check out the stocks. I need to have a separate session on stocks on TradingView in order to kind of, because for that you need to prepare a little bit more. So yeah. Unfortunately, I'm not going to pick up on Netflix, right? But in general, like I said, it's an interesting one. There are some positive news coming in into Netflix, because again, because of the competitors. There's not everybody's satisfied. Let's say when they jumped on the other competitors, they were not really satisfied, and now they're kind of coming back to Netflix. So again, there's this thing. So, but again, it requires a little bit more time. Now, EURCHF, guys. EURCHF, beautiful bounce yesterday, push back above all of the EMAs here on my daily chart, and it seems like, yes, we could go higher. But the problem is here, we have this downside line, which still is in play. So this downside line is drawn from the high of the 13th of January. So in order to go higher, I need to see a nice, good push above this downside line, and also just an extra a push above this little hurdle here, the 0.99, or actually let's round it up to 1, the psychological 1 level. If we push through it, great, I will go to the upside, and I'll start targeting the highest point of January, or the current highest point of this year, near the 1.0, let's again round it up, 1 level, and then we'll take it from there. So basically, in other words, this is the scenario that I'm looking at. For the downside on this one, I'm going to take a very conservative approach and wait until we drop back below all of the EMAs, and then I'm going to consider a move lower. EURNZD, guys, very quickly on this one. Look, I talked about GBPNZD being in a nice rising veg. EURNZD is just slightly different. And look, in general, if we look at the broader picture, we have some obstacles higher here, like the 1.7550 zone here. Could be a nice good area of resistance. But what I'm keeping an eye on for now is something around here, the 1.7464. I need to see a clear break through it in order to go higher, because if we get that break, then a forthcoming higher high would be confirmed. Now, another thing that I'm watching here, and why I'm leaning a little bit more towards the upside, is because we could be seeing here a nice bullish flag formation. And if that's the case, great, then yes, we could see a further move north. But I think that this is where it comes in nicely with my idea of waiting for a push above the 1.7464 area first. Because again, this if this is a flag, I mean, look, it could continue, you know, trading around here. Maybe it could even end up, you know, falling sharply lower, testing maybe the 50, and then rebounding and pushing back to the upside. So again, things like that happen. So that's why I would rather stick to the 1.7464 territory in order to go to the upside. So let's keep an eye on that one. And finally, Euro USD. This one is still in the range. So yeah, look, at this point, I'm keeping an eye on this one. We're waiting for some data, for some, you know, market moving data. So hopefully that can come out. And if we get that, great. I will go, you know, to the upside if we break above the 1.0885 territory right here. And if we clear that, then yes, it could open the door to some higher levels. For the downside, I need to see a drop somewhere below this territory, below the 1.0760. If we fall below this, then yes, I will go to the downside. So let's keep an eye on this, guys. At the moment, like I said, it's very vague. It's not very interesting, not the most exciting pair right now to be in. But let's wait for some data to come out, let's say this week, at the end of this week, the second half of this week. Let's see if we can, you know, get out of this range a little bit. So yeah, guys, that's it for this session. This was a very quick one. Again, not maybe the most exciting of the sessions because, again, not much is happening. So in comparison to last week and the week before that, I mean, this one is just, you know, a snooze fest. But unfortunately, this is how the market is. Look, be careful. The one thing I would say, even though even though it is a snooze fest, we just need one little trigger to make, you know, the market move sharply to either of the directions. And yes, then of course we'll just have to go from there and see what can we do about it. But in general, thank you very much for sticking around, guys, and watching this one till the end. I really appreciate that. So if you want to catch me tomorrow morning, as always, at my Easy Markets daily pitch at 6 o'clock GMT time. For now, have a beautiful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.